Most of my subscribers at this point know I'm a big fan of semiconductor stocks. On is no exception to this, but I like it for a very specific reason that maybe isn't normal for most of these stocks. We'll get into it. But first, let's look. It's up over the last 5 years, 207%. This is destroying the S&P 500, which is up only about 90% over the last 5 years. We're doubling it. Now it doesn't pay a dividend, and the S&P 500 does, but it really doesn't close the gap all too much when we're talking about performance. Over the last decade, it looks even better. Since late 2014, early 2015, we're in the range. It was in the range somewhere between 10 and 13. So even if you bought at 13, you're up a good amount. You're up much more than the S&P 500, which is up only about 200%. Maybe a little bit more when you include dividends, but it really, like I said, same with the 5-year, doesn't close the gap all too much. This is a stock over the last decade that has outperformed the S&P 500. However, you do have to factor in that since 2000 to about 2015, it didn't do much of anything and actually lost value. So this is a company that has only had success, quote unquote, recently. Believe it or not, 10 years for stocks really is fairly recent. That's not a crazy long time span, even though it feels like it, but a lot can change, in the matter of 5 to 10 years. AMD, for example, has gone from almost bankrupt to one of the largest companies in the entire world in just 10 years. So we should look a little bit at PE. The PE is cheap, right? So this is a company that not only has outperformed the S&P 500 dramatically over the last 10 years, last 5 years, but also its PE is significantly cheaper. S&P 500 PE is about 27, forward PE is about 23. So if we're comparing forward PE to forward PE, you still have a significant discount. Now, the reason that discount is because I would guess primarily because this company is not expected to grow next year. We would prefer our companies to grow, right? But if this company, because this company isn't growing, I'm still happy the PE is at this level. So it is priced in for this company to not grow next year. It isn't. And honestly, maybe even a year to year and a half out with these PE valuations. However, it is a little bit scary that this company isn't projected to grow, at least in terms of earnings per share. So that is mildly concerning, but that is why we get this cheaper PE. So obviously, this semiconductor stock does do semiconductors. It seems like they do a lot in the auto industry, but they kind of have their fingers all over. You can, of course, look into it yourself. I try not to go too deep into what companies do specifically because most of the time there's so many different areas. So they do a lot of, specifically, like I mentioned, automotive stuff, but also in quite a few industries. The automotive industry isn't projected to do well. You can see that in other stocks like STM and even like Qualcomm. Embedded isn't doing great either with AMD and stuff like that. Gaming isn't doing. So most of the money is in AI stuff. My understanding is On isn't too deep into all the AI stuff. So, but don't get me wrong, there's lots of semiconductors that are still valuable outside of that. Semiconductors and computers are going to go in everything. You hear about like the smart fridges and stuff like that, So semiconductors are going to keep growing even if it's not the top end stuff. Something like UMC, I did a video on that. That's another really interesting company if it's not like the cutting edge semiconductors. However, like I said, I think On Semiconductor is a good buy. If you're looking for a company specifically, you want more exposure to more exposure to tech, but you also don't want high PE, right? Because let's just say you have a lot of growth stocks. Growth stocks is good. But, there's nothing wrong with inherently taking a shot at something with a little bit cheaper PE, but also has a room to grow. Because usually with value stocks, stocks that are at less than the S&P 500, you can get them for cheaper. And, if there's a recession or something, depending on the business, it won't fall as much as some of the more speculative high PE stocks. However, with this stock, considering it is in tech, maybe it doesn't have the highest ceiling like an Nvidia or something like that, but because it is tech and because of the market cap only being 28 billion, there still is a lot of room to grow. So it does have that high ceiling, not the craziest, not the highest in the world, but it does have a high ceiling where they can do very, very well. So, and most value stocks do not have that. So I like this as a nice exposure to tech, exposure to semiconductors, while also having a pretty high ceiling while also being a value pick. The only negative to this really that I see is no dividend. I do like value stocks to pay a dividend because if you run sideways for 2 or 3 years, it's really nice to get that dividend payout on the side. But no, the two biggest things I'd be concerned with this stock specifically is if it continues to not grow, you'll probably see the PE continue to fall. That's just how these things work. And then, like I said, I just think the industry, it's already baked into not do well over the next year, but we might be a little bit iffy on that for a while. But the issue with timing things perfectly, it's so hard to, because if you're like, I'm just waiting for the car industry to recover, once everyone knows it's recovering, it's already going to be priced in. But anyways, we're getting a little bit too much in the weeds. I'm going to take a quick look at the historical PE. Yeah, we're right around normal levels, actually a little cheaper, somewhere between 16, 14 for PE, or 16 to 21. Yeah, we're a bit on the cheap side. Not too surprising. Beating estimates, that's always nice. So it looks like 20 of the 33 analysts say buy. That is about what you expect. 2/3, usually for the growth-centric stocks, it's 2/3 are saying buy, another third are saying hold. Or this one is not even necessarily a growth stock, but more are saying buy. So this is a good amount of analysts, but I try not to put too much weight into that personally. Anyways, I think I've covered what I want to in this video. I hope you guys enjoyed. If you do, leave a like and subscribe. I'll catch you in the next video.